Yeah, it's time to do business again. We have 25 minutes this time around on Business Incorporated, and here's what we have prepared for you. Kenya has secured a 43.5 billion Kenyan shillings loan from the African Development Bank. And Kenya is really popular this afternoon. We see their forex has surged 2.1 trillion Kenyan shilling. Mozambique is seeking to ease its debt burden, and they're pursuing a new financing agreement with China. Welcome to the program. We start as usual from what's going on in the oil prices space. It rose from earlier today. Escalating tension is in focus, and so Brent has gone more than what we had this morning. It's now $85.55 a barrel, 1.5% higher than what we had. And then WTI is a whole 2%. Remember, this morning it was at $79. Well, it's gone up to 80 now, $80.53 a barrel. Shows that there's no ease coming at all from the talks. I mean, talks have even closed. Even the President Donald Trump has threatened Iran that if they don't return to the talks, then they will have a lot of strikes. But I don't think Iran is paying attention to that threat. And then natural gas also follows the same trend. It's gone up 0.66% at $2.88 for that. So it's not a beautiful picture coming from the oil and gas space globally. For metals, it's on track. That's gold is on track for its biggest weekly loss in 6 days as escalating U.S.-Iran clashes has lifted oil prices, and of course that has added to inflationary pressures and is strengthening the case for higher U.S. interest rates, which is one thing President Trump doesn't want to hear, but it looks like he's working against himself at this point. Spot gold is up 0.21%, $3,999.60. Spot silver is on the flip side, 0.89%, $55.06 per ounce. Platinum is 1.69% down, $1,252. And palladium is more than 3% down, $1,592.70. And copper follows suit, almost 2% drop is what we've seen there, $6.23 for the price. And everything obviously is connected to the tension between the U.S. and Iran and what's going on at the Strait of Hormuz. And away from that, Africa's critical minerals may be a commodity trap. That's a warning by the acting Secretary General of UNCTAD, that's the United Nations Trade and Development, Mr. Pedro Manuel Moreno. He's warning that without deliberate action, critical minerals could become the next commodity trap, as mineral-rich countries supply the next industrial era, while others process, manufacture, innovate, and capture the larger gains. UNCTAD notes that strategic sectors accounted for 44% of greenfield projects values last year, 2025, and that's up from 16% in the year 2020. They are shaping where future productive capacity is built and who captures value from the next generation of trade. Mr. Moreno says that Africa should not be treated as a passive supplier of raw materials for the energy transition, artificial intelligence, infrastructure, or advanced manufacturing. He says that if the world needs Africa's minerals, then partnerships must help build African industries. The world clearly needs African minerals, according to him, and the defining choice is whether that demand preserves the old geography or extraction, or helps create a new geography of production capabilities and retained value on the African continent. A bit of corporates now. Iron Capital is one of Africa's leading investment banking and asset management, and it's been named Nigeria's best investment bank for financing solutions. This happened at the prestigious Euromoney Awards for Excellence 2026. It draws attention to Iron Capital's masterful transaction architecture and its profound impact on the African financial landscape, in just 7 years into its operational history. According to the Chief Executive Officer, Mr. Jibril Enakele, this recognition from Euromoney validates the core philosophy of intentionality, depth, and quiet authority. The Euromoney Awards for Excellence is widely considered as a definitive benchmark for the global banking industry, rewarding institutions that demonstrate exceptional leadership, innovation, and momentum in their respective markets. Iron Capital's victory in the investment banking financing solutions category underscores the firm's unparalleled capacity in executing high-stakes, multi-billion naira infrastructure bonds, capital market issuances, and innovative debt structuring. Operating seamlessly across financial advisory, capital markets, and asset management, Iron Capital says it has successfully structured over 3.11 trillion naira in transformative capital across the continent. The investment bank prides itself as the first sub-Saharan African multi-family office licensed in Dubai, and the firm continues to bridge the gap between regional wealth creation and global legacy preservation. Iron Capital provides distinctive expertise in financial advisory, capital markets, wealth management, with strategic offices bridging Lagos, Abuja, and Dubai. And the company says it is dedicated to engineering the future of African finance through deep institutional experience and uncompromising global standards. East Africa now, Kenya has secured a 43.5 billion shillings financing package from the African Development Bank to support economic reforms and strengthen fiscal stability. The funding is expected to boost public financial management, enhance governance, and improve the business environment as the government works to sustain economic growth. The loan also underscores the African Development Bank's continued support for Kenya's development agenda, aimed at ongoing efforts to address budget pressures and stimulate private sector investment. And still staying in Kenya, well, the foreign exchange looks good. It's on course to reach a record 2.1 trillion Kenyan shilling, and that's providing a significant boost to the country's financial stability. The strong reserve position is expected to support Kenyan shilling, strengthen the country's ability to meet external debt obligations, and cushion the economy against global market shocks. Economists say the milestone reflects improved foreign currency inflows and reinforces investor confidence in Kenya's economic outlook. Away from Kenya, now Mozambique is seeking a new debt agreement with China, drawing inspiration from Brazil's recent restructuring deal as it looks to ease repayment pressures and strengthen public finances. President Daniel Chapo says that the government is exploring options to secure more sustainable financing while maintaining investment in critical sectors. The proposed arrangement reflects a broader push by African economies to renegotiate debt obligations and create fiscal space for long-term economic growth. And talking about long-term economic growth, let's talk about how you manage your money for long-term economic growth. And this afternoon, we're looking at, is it possible to become rich by staying on salaries? I don't know. All right, so we have joining us an author of a book that had explored this topic, Oluwapo Adekoya. She's an author of Financial Prudence, the Money Management Tool. Oluwapo, good afternoon. Welcome to the program.
Good afternoon. Thank you so much for having me here.
So is it possible for me to become rich, like wealthy, by earning just salary?
So I would not say that just salary would be what you need to become so wealthy, because we have to first of all look at what are you looking at to say wealthy. Is it a trillionaire? Is it a billionaire? Is it a millionaire?
A trillionaire in dollars.
A trillionaire in dollars. Okay. So that means that first what has to happen is, how are you managing the money you're currently making? The salary that you're currently having. How are you managing that money? And let's look at Nigeria. Generally, just Nigeria. How do people manage money? People look at, how do I earn money? How do I make money? But they do not think about how to manage that money. And this is the first issue we have. That's why you would see that some people are making the millions. They don't look like they're making the millions. And some people are still, getting to the millions, but they look better. So how do you move from where you are to making the $1 trillion that you actually asked for? I would start by saying it's money management. And the second thing is decentralization. What I mean by decentralization is you're not just earning from one place. Looking at what we have now, AI has even taken lots of businesses. AI has improved the life of people. People even in their 40s, their 50s are learning new skills, are learning how to do things using AI. And that's one of the ways that you could increase your profits in the confines of your home. You could earn more money. You could freelance. You could offer your services, your knowledge. People would even go as far as selling courses, selling maybe materials online, and they make money from there. I'm not saying that will make you the $1 trillion you're looking for, but what I'm saying is, at different level, you can increase the life that you have now, the salary you're earning, if you could decentralize and manage money better. And part of this money management is budgeting and other things that are attached
so
to
I
it.
hear you about the multiple source of income that you're talking about, and then of course the managing of what you have.
Yes.
But let's go to the multiple source of income.
Okay.
There are some people who have jobs that it's really difficult to infuse anything, especially for women. So you have your job, and then you have the home to cater for. So how realistic is it for you to diversify your source of income?
Okay, so this is still from what I'm coming from, is still the fact that from where you are, you can make much more money. So let's use an example of a fashion designer. Before, we used to understand that all a fashion designer needs to do is be in a shop or a store, or maybe where she's making the dresses, and that is all. But now you see fashion designers taking in hundreds of people, training, selling courses online on Coursera, taking YouTube courses so that they can make money from the confines of where they are. So for that fashion designer, all she needs to do is just record a session and then put it online. So she's making money in different places, and she's still doing the same thing in the confines of her home. So I think it is the first.
As a communicator, I'm a journalist.
Yes.
How does that work for me?
Trust me, you can take a course and say how to speak better. I would register, because I want to speak better than I am doing right now, and you can make it. You can make a lot from that actually. So it is actually thinking outside the box, still within what you're doing, and making money out of it.
Okay, what about the management of the resources that you have?
Yes, that's one thing I'm very clear about. So management starts with number one, tracking what your income is. So maybe I tracked my income last month. I realized that my aim is to make the $1 trillion, and right now I'm still making millions. It begins to open my mind to how do I make much more than I'm making currently. So tracking the income, knowing how much is coming, can it even fund my lifestyle? That's one problem people have. They forget that there has to be a ratio that funds their lifestyle. So what we have currently in Nigeria, with most youths, let me focus on the youth now, is we want to live according to what we are seeing online. We want to live like you. We want to, live like the reels we are seeing. But we have not gotten to that stage. And we forget that we have to manage our expense. We have to manage our income. We have to budget. And we run into lifestyle inflation. Lifestyle inflation means that maybe I start earning 2 million more than what I was earning before. The next thing I'm thinking about is change my accommodation, change my car. I'm not thinking from that place of I'm not supposed to live out of my capital. I'm supposed to live from the interest that is from that capital. So those are the things that can be in place to manage what we are currently earning.
That takes a lot of discipline.
Yes.
And amidst all of this, we're supposed to think of savings and investments.
Yes. And that's okay. I think I love that actually, because people think that savings has to be 50% of my salary. I have to save every time. I tell people that the first thing you need to do is get an amount, even if it is 10%. And be consistent with it. Before you run to investment, what people think is investment is I have to put money somewhere and then I don't touch it. That is savings. Investment even starts with looking around your circle. Who can I reach out to? My network is my investment. The people I can talk to that can make me better is my investment. For me, maybe as a professional, I can say I want to take a professional course, and in the next 2 years, it's going to increase my value in the market. That is investment. It doesn't have to be I want to go and save money somewhere. I need to buy treasury bills.
And some of these fintechs now, they have spend and save.
Yes.
So when you spend some money, the percentage of it.
Yes, I think some of them 12%, because I've gone through like 15 apps actually. Some of them 12%, 15%, I think. So yes, it's beautiful. You can spend and save, but actually sometimes it's not every time that you have to put your money down, because the time value of money is very important, and people don't remember there's a time value of money. They just want to save and then forget their money there. So that's
you might actually be losing when you just keep your money there.
Yes.
All right, Anolu Akwadekoya, thank you so much.
Thank you.
Author of Financial Prudence, the money management tool. Thank you for your time.
Thank you so much. Thank you for having me.
All right. Okay, so now let's see what the market looks like intraday, and we see a recovery from a negative close yesterday. So we see the market is up this afternoon. 0.05% is the all share index at this time at 242,265.20. For Johannesburg, it's negative now, intraday 0.78%. Let's see Egypt. Egypt is, however, closed on Friday, but it closed positive 0.70%, and the Nairobi Stock Exchange, that's 0.16% in the green. See the Middle East, and we see mixed sentiment, but only two markets trade in the Middle East on Fridays. Dubai and Abu Dhabi, they're both negative at intraday. The other markets are closed. And then we move over to the Tadawul and Qatar. They're closed. They closed positive yesterday. In Asia, market opened lower today, connecting obviously as usual to Wall Street. In the United States, the Nikkei, very red markets that we're seeing, or we saw at the close of trade in Asia, more than 4% down for Nikkei. Kospi of South Korea also down 6.37. Hang Seng is also down. Also, South Korea markets are closed for a holiday today, and Shanghai is also red, while Nifty 50 was able to escape that sledgehammer of redness all over. Moving over to the United States now, jitters over artificial intelligence spending is weighing really hard on investors. So we see it's dragging global tech stocks lower, and of course that spread to most of the market. So the Dow is down, S&P is down, and there you have it. That's a fear around artificial intelligence stocks. Almost 1.5% down is what we have with the futures of the United States in NASDAQ. In Europe, however, let's see if that's spreading over there. We've seen the red in Asia, the red in the US. Let's see if that's also affecting investors' sentiment in Europe. And we have Lars. Hey, Lars, good afternoon. What's the market looking like?
Yeah, hello, Ini. It's good to be with you. Well, you know, there you had it. Asia deep down in the red, America in the red. So we're squeezed right in the middle. And of course, markets in Europe are down for yet another day as well. And, you know, you got the tech weakness in there, of course, but also looking at the geopolitical environment, anything but a loss here would be kind of a surprise. I mean, the ongoing crisis there in the Gulf region has now led to oil prices seeing their steepest weekly climb since April. Just this week. So that's something we can't ignore. Markets can't ignore. It will bring extra costs to consumers and to businesses, and it will obviously affect the entire economy negatively once more. So it's pretty fitting that we're down once again.
Yeah, and away from the market, we hear, I mean, it's the reality of a lot of governments now. Revenue down, expenses up, social programs most affected. But I think they said there's a new way the German government has found to close this gap.
Yeah, not maybe entirely close the gap, but, you know, as you say, that's not easy really for the government to bring in extra revenue when the economy is not growing and automatically generating more taxes. So they're looking for something, and tax increases are never popular, but some tax increases, turns out, seem to at least be a little bit less controversial than others. And so the German government will now raise the tobacco tax drastically over the next 4 years, supposed to bring in 800 million euros extra this year, and going up to bringing in an extra 4.4 billion euros per year by 2030. As for the consumer, of course, is going to pay the price. Instead of currently €8, they're going to pay a €12 for a pack of cigarettes. So that would be an increase of 50% for smokers.
Well, is that to drive habits, you know, better, healthy habits? But does the government have any plan on how to spend this money?
Well, Ini, we're talking about tax increases. So by law, this extra revenue will flow right into the general budget because it's not allowed to raise taxes and earmark the benefits for certain projects. But we see some sort of consensus in the government, really, that a lot of that money, maybe all of it, maybe in the end even more, will flow into healthcare because that's where it's needed. And it makes a lot of sense, obviously, because these higher taxes are meant to at least help a bit with the fiscal damage caused by smoking. Experts say that smoking costs the German healthcare system some 30 billion euros per year. Much of it relates, of course, to cancer caused by smoking. And then looking at the problem on a broader economic scale, there's also approximately 67 billion euro in losses due to loss of productivity for the entire German economy.
Yeah, so it sounds reasonable that the fund is channeled to the health sector. But the consumers, what are they saying about this?
Yeah, obviously consumers not very happy, at least not those who smoke. They were shocked to hear how much more expensive their vice will become. Now, there's some, of course, that say they will still smoke and somehow cough up the money. And there's some who say maybe this is just another reason to finally quit. Good luck to them. Now, the government says they would like for people to quit, of course. But since this entire plan was also very openly communicated as a tool to plug some holes in the budget, it seems that this might have been a lesser argument. Now, some, and especially the tobacco industry, as well as the retailers, they're saying that higher taxes might in the end lead to more people buying their smokes illegally, maybe abroad, and smuggling them in. But others are saying that this would only be true actually for a relatively small percentage of the market, and that they're really counting on the additional revenue and other positive benefits of this plan.
Yeah, maybe some people have been trying rehab and all, and it didn't work. Perhaps this, cost might be able to help them solve the problem of smoking. But then, maybe only the wealthy will be smoking at the end of the day. But last, thank you so much, and do have a great weekend.
You too, Ini. Thank you.
Okay, so let's see what's happening in the crypto space. We start from the United States, where the Securities and Exchange Commission is moving closer to creating a regulated pathway for token sales, with new proposals expected this July. The initiative is to provide legal clarity for blockchain projects that are seeking to raise capital while strengthening investor protection and market oversight. Industry participants say that the move could reshape digital asset fundraising, encouraging innovation, and mark a significant step towards a more structured U.S. crypto regulatory market. From the United States, also a key piece of U.S. cryptocurrency legislation is moving into spotlight. The Senate holds a crucial hearing of the Clarity Act, and the proposed bill is to establish a comprehensive regulatory framework for digital assets by clearly defining the oversight responsibilities of the Securities and Exchange Commission and the Commodity Futures Trading Commission. That's also in the United States. Binance also they're streamlining their trading platform with the removal of 4 spot trading pairs as part of routine market review. And we've seen them, they've been clearing up for a bit. I wonder if we have the price of Bitcoin at this time. Yeah. So it's blood everywhere, blood from the equities market, even right here. 63,079, lost more than 1% in 24 hours. Ethereum is a heartbreaking one, though, for me. I'm sentimentally attached to Ethereum. Lost almost 2.5%, and it's less than $2,000 right there. But a whole lot of red going on there. Everybody's feeling the pinch of what's going on between Iran and the United States. And we haven't been hearing from Iran, so we don't even know, even with the threat from the United States that if they don't come back to the talks, they will keep striking them. We haven't heard anything, but we've been seeing, or at least hearing of the strikes that they've been carrying out, talking about Iran. So it's not a good one for the world at this time, where we thought we had a bit of stability dealing with inflation, but it's right in our faces now. We don't know what will happen this weekend, because it looks like President Trump always has a plan for every weekend. So we don't know what this weekend will hold. If we're already in red, I don't know what that would be. But anyways, that's where the program ends today, talking about Business Incorporated. We're so glad that you were part of us all through the week. And next week, We are back again by God's grace. But over the weekend, please go back to our YouTube channel and watch our programs, Business Morning and Business Incorporated. Stay informed, stay empowered with our business programs. I'm John Mekwa. Bye-bye.